Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money Market Wrap, where we talk about the biggest moves in the markets this week and what is driving them. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Wealth.
And I'm John Stepek, senior reporter at Bloomberg and author of the Money Distilled newsletter.
Hi, John.
Hi, Merryn. It's been a while.
Is it?
Yeah, it feels like it's been a while. We had a few days. I did one with Marcus, and then I think we might have skipped a week.
But I've spoken to a lot of interesting people, even if I haven't spoken to you. There's been Arthur Laffer. That was kind of cool.
Oh, he was great.
Albert Edwards coming up next week. That was great.
Oh, that'll be great.
Rob Arno, really good.
Yeah, he's very good.
Yeah, a lot of other good people coming up. I mean, this podcast it's really holding its own at the moment, guest-wise. And then there's you.
Well, obviously, I'm the sorbet to clear the palate of all that quality.
but not of that downbeat contrarianism.
Exactly.
John, you were writing about the Bank of England today. We got a hold on interest rates, which isn't very exciting, but nonetheless is what we expected, isn't it?
It is, but the unexpected bit was that the vote was much tighter than Marcus had thought. Or rather, it wasn't much tighter. They thought that 6 people were going to vote to hold and 3 were going to vote to cut. And as it turned out, 5 people voted to hold and 4 voted to cut. And by the sounds of it, it sounds as if, everything else being equal, Andrew Bailey would like to go for a cut in December if everything remains, broadly speaking, the kind of same as it is now. Now, obviously, the difficulty is there is the budget before that. There's also another 2 inflation data points before that. But the thing is, if inflation actually peaked at 3.8% in September, which is the most recent one we've got, it'll probably come down to about 3.5% before the bank's next meeting. And that would give them the leeway to cut by a 1/4 point, because one of the problems I think with cutting this month would have been that they'd actually have had a negative real bank rate at that point, because the bank rate would be 3.75 and CPI would be 3.8. By the time the end of the year comes round, they haven't got that kind of visual hurdle to get over. I think it's interesting because one thing that I will say is that Rachel Reeves had her emergency fiscal narrative reset at the start of the week, and that it sort of came out of the blue, but one of the points that she was trying to drive home was that the thing she wants to tackle is inflation, and she wants to see interest rates come down. And the kind of fact that she's been emphasising that, it sort of suggests to me, and also the timing suggests that she did want to send a bit of a signal to the Bank of England. And while they might not have cut rates this month, it kind of, again, makes it feel as if that's what they want to do next month. Especially because, to be fair, it was her. A lot of the inflation over the past year was her fault because of the raising employer national insurance contributions and raising minimum wage. So that's one of the things that's helped to drive up the cost of food, for example, in supermarkets, because employers are passing on some of their cost increases into the cost of the products. And the fact that she's sort of come out and said, but I'm not, or certainly tried to say, I'm not going to do that again, she gives us at least some sort of clue as to where she might be leaning for the budget.
Yeah. I mean, this is quite interesting, isn't it? And that if we look at the budget and there's so many things being floated around the place, if you kind of divide it up by thinking, well, she won't do anything that will make the inflation numbers go up, you can remove quite a few things from the list.
Well, VAT for a start. And actually, the other interesting thing is because there's been, one of the things that's come out today is the idea of charging a per mile tax on electric vehicles to replace kind of road tax, basically. And one of the things I've been sort of thinking about is, because the OBR, every time they do their budget forecast, they act as if the Chancellor is going to unfreeze fuel duty, even though no one has unfrozen fuel duty since 2010.
Yeah.
So that means that actually whatever amount you're told the Chancellor has to make up, there's about another 5 billion or so on top of it, because they're kidding on that this is kind of baked into the pie, and it absolutely isn't. So I was thinking she might have to increase fuel duty, but of course that would be inflationary. So I can see this road tax substitute is coming in as a thing which means she can still keep petrol duty where it is, so that doesn't push up inflation. But it obviously it's an added cost for anyone who's got an electric car.
God, the hoops they jump through.
Yeah, it's
just ridiculous.
It's unfortunate. There's so many elements of the short-term politics that militate against good longer-term policy, and you do have to wonder who is the audience for all this stuff ultimately. Is it just that they care about the headline in the newspaper, the attack angle they're going to get kind of attacked on? Because this is the reason we've got, a tax Bible which is 24,000 pages long. It's ultimately about a load
in the world.
Yeah. Chancellors chasing short-term headlines.
Anyway, that's not. We have to move on. We mustn't depress ourselves over this any further. This week we have had the what you call the emergency fiscal narrative reset, and I call the emergency expectations reset, but same from Rachel Reeves earlier in the week, and she would like everyone to know that absolutely nothing is her fault, never has been, never will be. And that is that. But because of things that other people have done, which were nothing to do with her, everyone's going to have to pay a lot more tax. And when she says everyone, she actually probably does mean everyone this time, right?
I hope she means everyone. Because as long as she does mean everyone, then we might get a relatively simple budget. I think that's probably hoping for too much. But the thing at this point, parking what I would really like to see, but if Rachel Reeves stood up, basically spoke for 20 minutes and said, I'm putting income tax up across the board by 2 pence, and that's basically it, then I'd be happy. I would probably write a very nice Money Distilled about that in the context, because that would be, in this situation we're in the situation she's kind of managed to stick herself in, that would be about the best way to deal with the problem, the least disruptive way to deal with the problem. I mean, not that any of us would be particularly happy about it.
But it's not enough, is it, John? It's not enough. I mean, you get maybe 5 billion, 7 billion per penny. I mean, say tops 15 billion. It's nowhere near enough. Doesn't touch the sides.
Well, okay, maybe you need to do 3 pence. But if you do 2p on the basic rate, because I mean, there's no way that we're not going to get a bit more than that on the higher rates, just to show that the rich are getting squashed as well. I think that's maybe 20 billion if you do that.
And is that enough?
I mean, no, it isn't enough. She probably does still need a bit more on top of that.
If you go back to 50p in the pound at the top rate, so 52% with your national insurance. We did have Arthur Laffer on last week, and the Laffer curve, we think, kicks in well around there.
I mean, I think he's right. I mean, and that raises buttons anyway, if it does make any money. I mean, already the top rate of tax doesn't raise that much, and if you bump it up, it's you're talking millions rather than billions. So it's always been a virtue signalling tax level. But for some reason, that seems to be important to our politicians.
Virtue signalling.
Yeah.
Well, what we really need is policy that works rather than policy that makes people feel good about themselves. But what would I know? It's
not even making people feel good about themselves at this point. But
Rachel Reeves clearly doesn't feel good about herself, does she, poor thing?
No, I suppose she's just hoping to hang on.
Why? If I was her, do you know what? I wouldn't want to hang on. I wouldn't want to hang on. I'd be looking at it going, well, this is absolutely no fun at all. Turns out everything that I believed in doesn't work. I was completely wrong about everything. Do you know what? I think I'll call it a day and go home. That's what I would be doing if I was messing something up this badly.
It's very hard to wrap your head around a politician's psychology, because I can't imagine that any of them in the last 10 to 15 years have had any fun. The last one that looked as if he was kind of enjoying himself was Tony Blair. And I mean, I wouldn't dare hazard to think about what goes on in his head on a daily basis.
I suppose look at it the other way around. I mean, someone sent on social media the other day talking about politicians and their general failure to grasp basic financial concepts, etc. And someone said to me, it's not that they don't understand, it's just that they're all horrible people. And I was saying that simply isn't true. Pretty much every politician that I come in contact with, these are people who really, they mean well. They mean well. They want a good outcome. Everyone wants the same outcome. They want it to be one where living standards rise and people have better living standards and everyone is happier than they are now. Everyone wants that. There's no one who goes into politics thinking, well, maybe there are a few thinking I'm just going into this to, I don't know. I mean, it's like you're paid enough. I don't know why you would go into it if you didn't mean well. Most people mean well. But if you get into high office and you find out that meaning well is not enough and you are absolutely lousy at the job and therefore the result of your actions is to make things worse for many millions of people and to make you completely miserable, why wouldn't you just down tools and go home?
Because I suppose it's just cognitive dissonance. They believe this stuff, and a lot of the time, for example, to believe in rent controls, you have to essentially be impervious to history, to reason, to logic. And yet it keeps coming back. And you're right, I don't think Zoran Mamdani wants to destroy New York or to make people's... He wants to make people's lives easier, but for some reason, he thinks that if he does rent controls, then it'll work.
And he absolutely refuses to look at decades and decades and decades of evidence. And one of the few things that pretty much everybody who ever looks at numbers, actual numbers, because numbers aren't opinions, they're numbers, agrees on. I mean, I'm writing this week, by the way, about the end of rent controls in Cairo.
Cairo? Oh, interesting.
Yeah. When rent controls in Cairo since the 1920s, there's been rent controls in Cairo, one way or another. So a lot of the center of the city, certainly all the old apartments, are all controlled. There are people paying the equivalent of 25 cents a month for gorgeous 4-bedroom apartments hanging over the Nile. Everything falls into massive disrepair because the landlords have no money to sort them out in any way whatsoever. And, well, you know the story. Everyone knows the rent control story. And finally, that is being reversed.
That's going to be fascinating. That would be really interesting. I had no idea that was even a thing.
Right, moving on. Moving on from the miseries of the UK fiscal situation and the upcoming budget and how you're going to have to pay more tax and I'm going to have to pay more tax. And for once, everyone's going to have to pay more tax. Moving on from that to the market. Now, the AI story seems to be slightly unwinding. Markets have had a fairly volatile week, and we've been talking about this for ages, you and I, saying, is this a bubble? Isn't it a bubble? Of course it's a bubble. It's just a matter of when it crashes, corrects, and then crashes. Normally you get a little correction before you get a crash. It's just a matter of when, not of what, right?
Yeah. And the other interesting thing, and this is something that I'm more hearing mutterings of rather than there's something I need to look into in a lot more detail, but the whole thing's also tied up with stuff like private credit and private equity and all of the unlisted sort of like, where's the money coming from? But I think the real issue seems to be more that markets are finally getting a bit jittery about whether the potential's going to match the amount of money being spent right now, because you're starting to get to that point where we're getting beyond. It's not so much we're getting beyond the hype, but we're getting to the point where people are saying, right, well, wait a minute, if you're going to be spending, and if you're saying that you don't care about the fact you're spending hundreds of billions on this stuff right now, we need some sense of when that's ever going to come back to us. And I think it's that more than anything else. It's this idea, right, well, wait a minute, that we're not seeing the return on the horizon that would justify this amount of investment. Although also I do think I still struggle with seeing how AI's going to actually change a lot of stuff. You keep, and I mean, I think that the people who run these companies tend to adopt a hyperbolic approach to it, partly for political reasons. It's like, if you can convince people that you're about to build a machine that could end the world, then that also convinces people that, this is a world-changing technology, I should be invested in it. So I think a lot of the scaremongering about it is also part of the hype. Anytime I try to use AI, it's like getting a really bad intern to write an article for you and that you have to then go back and check everything yourself. And I still can't find a particular use for it. And I know that I'm not especially stupid, and I am also not really a late adopter. I'm kind of somewhere in the middle with technology. And if I can't kind of get it to do something useful for me, then actually, how is it going to put all these people out of jobs, really?
Yeah. And how is it going to be monetized?
Well, yeah, aye. Well, especially whenever, I mean, that's the other thing, people don't see, there's a lot of competition out there. Like, it's a bit like when, in fact, it's not like when search engines launched, because when search engines came about, it took a little while to shake out, but Google was the top dog quite clearly, and they never really got surpassed. Whereas now you've got ChatGPT, you've got Claude, you've got Anthropic, you've got Perplexity. There's all kinds of ones that you can use, and I'm struggling to see the kind of story actually living up to the reality. And I guess maybe markets are getting there too.
And of course, there's all that Chinese competition as well, and we didn't have that back in the dot-com days, did we? There wasn't that sense that there was an entire globe competing with the companies in the US. So it's a different environment. Anyway, on that, I would recommend that all listeners listen to our podcast with Albert Edwards, which comes out on Monday, which is super interesting on all this stuff, comparing the dot-com bubble, or whatever you think back. Actually, we didn't call it the dot-com bubble in the day, did we, John? We called it the TMT bubble, the tech, media and telecoms bubble.
Yeah.
Dot-com bubble came later. Anyway, we talk about that quite a lot in the podcast on Monday, so do listen to that. The one thing that I wanted to mention before we go is the way the UK market, the FTSE 100, is reacting to the volatility in NASDAQ and tech stocks, which is by not being particularly volatile at all, and looking like it would really, really like to get to 10,000.
Yeah, this is the nice thing about being boring. It kind of comes into its own whenever all the exciting stuff is going down. You can trade in your Bitcoin for a FTSE 100 tracker. And
you can also, I mean, the other thing you can say is that while the UK market is also very concentrated, right? Whenever people talk about the US market being very concentrated and what a terrible signal, there's always someone who'll go, well, the UK market is very concentrated as well. The top 10 companies make up a very large percent of it. It's true, but they all do different things. Right, so the concentration in the US is such that the top companies, the ones we worry about all the time, they're all in the same sector. Whereas in the UK, up top, you've got your miners, insurers, your banks, etc. It's very different.
Oh, actually, AstraZeneca today is basically the top one. AstraZeneca, so your big drug makers, assuming AstraZeneca stays here. But actually, so a completely separate topic, having brought up AstraZeneca, the other thing, budget related, I think is really interesting, is what is she actually going to do about stamp duty on equities? Because Astra's decision to basically list in the US has meant that it's not going to pay stamp duty anymore, even though it's listed in the FTSE 100. And you're kind of like, you've suddenly created this, it's not even a loophole because it's completely above board. But the point is, there are lots of FTSE 100 companies that could do this. A lot of them have got big US businesses, much bigger than their kind of business that's generated here. So there'd be every rationale that they wanted for doing the same sort of thing. And then you wouldn't be getting any stamp duty, even though stamp duty would still be on the statute books. So I kind of feel that's actually something that she needs to take a look at. Because either way the tax take's going to go down.
You know, we've been saying this for forever. They've got to do something about stamp duty.
But this is actually
highest stamp duty in the world, etc. And now you say, well, okay, look, something has happened that proves that you need to do something to make the UK market more attractive, and you're not getting a stamp duty anyway if people leave. And you and I think that is a rational reason to take action.
Come full circle, haven't we?
I bring you back to the beginning of our conversation. I mean, if that happened, if in the budget we saw stamp duty abolished on equities, stamp duty abolished or maybe brought down to 10 basis points, 0.1% or something like that, then, I'd go, well, okay, you're listening. You understand something about incentive. And the same if she really did go through with cutting the amount you can put in an ISA in cash and putting some kind of mandation on investing in UK equities if you're using a UK-based tax wrapper, I would go, okay, well, you're listening, you understand about flows, etc. But, John, at this point, hopes are low. Hopes are low.
She might beat expectations if they're that low. You never know.
That's why I keep them low. Right. Anything else you want to say? Do you want to point out to everybody how good it is that you don't hold Bitcoin because it's gone down so much?
No, I don't feel I can be smug on that one yet. I mean, what is it? It's still over 100,000. So maybe once it gets back below 20.
Okay, you'll stop being smug around 20.
Yeah.
All right, there's a marker, everybody. Around 20, John's going to be smug and I'll be upset because my minuscule Bitcoin holding won't be worth as much as it was.
You'll never retire at this point.
I'm never retiring anyway. Never retiring. I haven't got one of those DB pensions. Not like that Rachel Reeves. Thanks for listening to this week's Merryn Talks Money debrief. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on X or Twitter at MerrynSW and John_Stepek. This episode was produced by Sami Sadi and Moses Andam.